Good afternoon. Thank you for sticking around for so long. My name is David, host of the David Lin Report. You'll find me on YouTube. I have more than 100,000 subscribers focused on finance and economics. Today we'll be talking about the importance of self-custody with a very distinguished group of panelists, Sagar Sarbhai, who is the Global Head of Business Solutions at Fireblocks, and Alvin Kwock, co-founder of OneDegree. And we'll be getting their takes on exactly what people should be looking for when they consider self-custody of crypto assets. Let's just start right with that topic. So self-custody has been an important and highlighted topic ever since the collapse of FTX, Celsius, and a few others last year. It's really brought to light the importance of self-custody and perhaps the dangers of a lack of knowledge and perhaps regulation in the industry. Before jumping into self-custodying your own assets, what are the most important criteria that an investor should look for? I'll start with you, Alvin.
Well, so OneDegree, we are a regulated and licensed insurance company out of Hong Kong. We have been protecting the different user funds, user assets by providing the insurance solution, and that is something that, like what you just mentioned, ever since FTX, Celsius, different cases, you are seeing different regulators are really stepping up in having qualified custodians, first party or third party. Of course, self-custody is also another solution. Well, quite frankly, I think like different people, depending on the persona, depending on sophistication, they might be looking for different solutions.
Okay, Sagar?
Thanks, David. First of all, I want to say custody is not a very sexy, glamorous topic. We are always behind the scenes. We are the boring guys in crypto, but also probably the most important guys in crypto, because custody is always the foundation for any digital assets use case. Now, for the benefit of the audience here, and I know we have a limited audience, but I assume that you are serious players in the industry, which is why you are sitting here. I want to break the complex topic of custody down and almost give you a decision tree or a mind map which you can use as a toolkit when you think about your custody requirements. So you mentioned self-custody. I want to first explain what self-custody is. So when you are starting a business, you could be launching an exchange, or you could be a bank looking at tokenization, or you could be a corporate wanting to do NFT campaigns. The first thing you need to decide is your custody strategy, because that becomes the foundation of the pyramid that you will build on. Now, to begin with, you have two options. That's the first decision you make. Whether you want to self-custody your customers' assets, or do you want to outsource the custody requirements to a third-party, dedicated, qualified custodian. Now, if, let's say, you are a hedge fund, a traditional hedge fund wanting to move into crypto, self-custody may not be an option for you, because you may think, I have never done custody myself. I have only 5 traders. I have a team of 5 people. I want to outsource that to a qualified custodian. So in that case, you will go to the market and understand who are the third-party custodians who provide the best infrastructure. So you will take what we call a sub-custody approach. On the other hand, if let's say you are a bank and you want to launch tokenization as a platform where you want to tokenize bonds and carbon credits and so on, you're probably better off getting into a self-custody model where you provide custody for your customers. And the reason for that is because you are a large bank. It is your fiduciary duty to enable that trust and make sure your customers' assets are safe and secure. So you do not want to trust a small custodian with a small balance sheet. So in that case, you will go for a self-custody approach. Now, that's the first level of the decision tree. Then you decide, okay, so what do I need to do? Whether I need to go with hot storage, cold storage, or warm storage. I would like to assume that people here are familiar with hot, cold, and warm, but for people who are not, and there are many jargons floating around, so I'll try and break it down as to what, first of all, what does a hot wallet mean? A hot wallet mean, and to draw an analogy, let's say I have $100, I have a wallet. The wallet always sits on me. So that's a hot wallet. It is always connected to the internet, and the signing happens without manual intervention. It's, to draw an analogy, it will be similar to me having my funds in my wallet. The second model is cold storage, where basically you store your assets in a hardware device which is not connected to the internet. To draw an analogy, that would be similar to having your money in an ATM. So every time you need a money, you go to the ATM, you take out the money. Similarly, every time you want to trade your cryptos, you go to your cold storage, take out the crypto, send them to the exchange and sell. Warm wallet is somewhere in the middle. It is something similar to a password protected wallet. Like, so I have a wallet. To open my wallet, I need a key, or to sign a transaction, I need a warm wallet. So those are the three. Then you have to figure out, what do I want to do, hot, cold, or warm. The third element is, which is a relatively new phenomenon, and you mentioned about FTX, is the phenomena of non-custodial wallets, where increasingly what we are seeing is your end customers, they are fed up with what has happened in the past. So they do not want to host their assets on a crypto exchange or a fintech bank. So they are saying, look, I am mature enough, I am sophisticated enough to hold my own private key, so give me my own wallet. So that's the third element, which is non-custodial wallets. And Fireblocks, our philosophy is that we want to be very flexible. Our only job is to provide wallet infrastructure. We are a cybersecurity company in our DNA. And basically, we provide all those options to you. All you need to do is figure out what is the right model for you, and then you can make a decision, and we can then.
Okay, I want to come. Thank you, Sagar. I want to come back to your business models in a bit more detail. Conceptually, how is custody different? Custody of crypto assets different from a traditional financial bank? If I were to bank my assets at, let's say, Citigroup versus a custody at one of your firms, how is that different? I'll let you start, Alvin.
That's a great question. We have been working with a lot of banks globally. Okay. Recently, for example, Zarouni Commercial Bank, they have it's a common client of ours because they have set up a crypto custody corporate car. Okay, so they are actually a joint venture between Zarouni Commercial Bank and also Fireblocks is involved in it, and the technology and different things as well. Okay, so now what we are seeing is there are more than 2,000 banks around the world.
Yes.
Who are actually interested to get into crypto custody. Okay, now a number of CEOs come to me, bank CEOs come to me and say, hey, should I get into this? I say, of course, for a couple of reasons. Literally, I think this is almost like, in a very layman, simplistic term, this is almost like a safety box plus data center. Okay, but of course, the technology layer, there's a lot more complexity to this, but I mean, there's something that, like on the safety, on the security side, we'll deal with it.
Hi, Dr. Marwan.
Obviously, right? Now, another layer to this is that, so banks have been doing custody for a very, very long time. In a way, I think this is one reason why people are willing to put money in the bank as well, in a way. Because I still remember back in some 30 years ago, people are not willing to put the money in the bank because what if it got robbed? What if it got into different incidents? And thus later on, there's different layer of protection, like deposit protection scheme. Okay, that's really, well, in fact, this was the Nobel Prize winning piece back in last year.
Yeah, but Alvin, we have deposit insurance up to a certain amount, right? In the US, FDIC insures up to $200,000. If I forget my key because I just don't remember my password, or my wallet gets hacked, or I lose the physical cold wallet, I don't get my assets back, right? There's no insurance for that. Is that changing in the industry?
So if it's on a third-party custody basis, okay, there are ways to retrieve it.
Okay.
Okay, but of course, if this is something that I hold it on my own key, okay, this is something that does require a lot of responsibility from the retail customer basis.
Okay. Dr. Marwan just joined us. Welcome, Dr. Marwan.
Thank you for having me. It's always good to have insurance, even when it comes to mics. So having 2 mics is better than 1. So it's a good segue to
It's a metaphor. Have 2 wallets, not just 1. Dr. Marwan, we've had a chance to introduce the other panelists. Why don't you tell us a little bit about your work?
So I'm Dr. Marwan Zarouni, CEO of Dubai Blockchain Center, as well as a strategic advisor for Dubai Economy and Tourism. Glad to be here.
Thank you. Tell us a bit more about the Dubai Blockchain Center.
So Dubai Blockchain Center is an impact business that's a strategic partner with Dubai Future Foundation. And the aim of the center is create the ecosystem for crypto and blockchain. So we started in 2018 to support the government's vision for adopting blockchain into the enterprise and the government, which is the public sector, but also evolved into supporting people in investing in crypto with ICOs, doing educational classes for regulators as well on how to regulate the space, as well as bridge this gap between regulators and crypto businesses.
The theme of our discussion is custody of assets. First of all, does the Dubai government hold crypto assets in its treasury?
I cannot comment on that.
Okay.
But
hypothetically, if you were to adopt cryptos formally, what would the custody solutions be?
I think there's already conversations to show you the direction of Dubai. We actually, our regulators, the CEO actually used to work for a custody company. So Henson was actually a retired CEO of a custody company. One of the first projects and one of the exhibitors and also sponsors is actually a custody solution, which is Fireblocks as well. So,
yes.
And we have one of the panelists, I believe, is Fireblocks as well, Sagar, sitting right next to me. So this shows you the direction that we're taking. One of the earliest conversations that we've had as the Dubai Blockchain Center with the government was the importance of custody. When you look at cryptocurrencies, one of the biggest gaps and one of the biggest hindrances of this mass adoption is actually custody. The banks have matured through various mechanisms to ensure people's money to certain, we were just talking about it, to certain amounts, right? For the customer side, for the bank side, for with regards to everything from loss to hacks to all the stuff. The cryptocurrency space and the blockchain space is playing catch up to this. We have a lot of customer-based solutions, but we don't have institutional solutions that are mature enough.
Yeah.
But it's coming there. I think it's evolving in a very rapid way.
I'll let the other panelists respond to what you just said. So Sagar, Dr. Marwan mentioned that Fireblocks is collaborating with the government, let's put it that way. So why do you think they selected Fireblocks?
So first of all, I want to touch upon the earlier point that you raised on the evolution of custody. Going back into time, 2014, 2015, if you were a large fund and if you wanted to custody your assets, you had only one option. And that option was to go to a third-party qualified custodian. You would give them your private keys. They would lock those private keys in a hardware device. That hardware device would be locked in a locker. That locker will be locked in a bunker, and the bunker would be somewhere underneath a Swiss Alps or somewhere.
Sounds pretty safe to me. What's the problem with that?
So the problem with that is, now imagine you want to now trade on that, okay? Now you want to start trading on your Bitcoin ETH. Every time the price goes up, you want to sell, you will have to go to the bunker, unlock, and that may take 2 days. The biggest problem with that is not this. The biggest problem with that is you are still at the mercy of the 2 security guards who are monitoring that bunker. So let's say if one security guard feels, okay, you know what, there are about $500 million worth of Bitcoin there. It's easy money. I can take it, and your tokens are gone forever. So that was the biggest issue with that. But over the last 6 or 7 years, the world has evolved. And I can proudly say that Fireblocks has had a role to play, because we were one of the first players to come up with this concept of leveraging a mechanism called MPC for self-custody. There were many other players who were doing self-custody, but we became the pioneers, and we became our philosophy always was to work with the institutions, work with the regulators, work with the governments. And over the last 5.5 years or so since our inception, we have powered some of the largest custodians on the planet, including Bank of New York Mellon. So Bank of New York Mellon said, okay, we want to offer this service to our customers in a very new manner, where you don't have to go to a bunker inside a mountain, but it would be within us. Bank of New York brings in the trust and the brand, but our stack runs on Fireblocks.
Right.
And we obviously, I'm happy to get into the details of how we secure those assets, but that is how the world has evolved. And then, of course, on top of custody, we are talking about AML, KYT solutions, travel rule solutions, how do you secure your API keys, and so on. So there are many, many other solutions on top of custody. And you can stitch together all these solutions to actually implement a very safe and secure self-custody setup.
Dr. Marwan, you said that one of the biggest obstacles to adoption is custody. Well, what are the biggest problems with custody today that need to be addressed?
I think that it's just the friction, right? You want to create a convenience of a wallet where you can, buy and sell and have access to it. At the same time, you don't want to be at the mercy of, or put the onus on the customer to actually be able to do the right thing. A lot of people forget their passwords, and if you forget your password, you lose your wallet,
Yes.
But at the same time, you see the industry always pushing the same slogan, which is not your keys, not your money. You want to strike a balance with usability as well as security. And we're still not there yet, but I think us in Dubai having the right players like Fireblocks and OneDegree and others to provide an ecosystem for this, and then alongside that, have educate the customers on how to preserve their keys, educating them how this actually works, educating the banks on why they should have a custody solution for themselves if they're going to hold either themselves some crypto on their portfolio or hold customers' money on their, for example, app or other services. So all these things are actually complementary to each other.
Alvin, hypothetically, what is the ideal, or is there an ideal solution to the problems that we discussed? Meaning we want a combination of good usability, good security, and at the same time will help with the adoption. What does this custody solution look like?
Yeah, absolutely. Well, I think the combo of usability and security, I think that finding the right balance, it is something extremely important. And I do salute the MPC, multi-party compile. We like that. We have been insuring a number of guys in the MPC space, including some of the Fireblocks customers as well. But having said that, the hacking activities, the hackers are also getting smarter and smarter over time, right? So in fact, I mean, even MPC, one thing that I think it's easy to call multi-party compute MPC technology, but different guys implement it in a very different ways as well. Okay, recently, I think Fireblocks also discover that there are certain loopholes that need to be fixed, okay, for the technology itself. Now, at OneDegree, what we are doing is that we take a lot of time in going deep dive into different technology on the custodial technology layer level, on the operational level of the customers, in how they do the setup, in order to actually have the right balance between the usability and also the security. And that's something I think is extremely important.
Three, right? Usability, education,
yes,
and then the technology or the technical enforcement.
And I think on the education side, I think there's something that I think the regulator is starting to give a lot more emphasis and focus on what the regulatory environment would be looking like. Imagine if it's something that is legally not sound. How can it take off among the mass public? I think that's something that's important. And so a lot of those criteria start to come out about the protection of the user funds, for example. And I think there's something that is going to be extremely important to take crypto, to take digital asset to the next level.
I just want to add one more point to education. It's similar to education, it's awareness. The perception still in the industry is that custody is all about securing your private keys. To be honest, the sophisticated hackers sitting in North Korea have moved beyond that. They know that there is a lot of emphasis on private keys, so they find other loopholes. For example, deposit spoofing, man-in-the-middle attack, hacking your APIs, your policy engine. So the smart hackers will never target your private keys. Well, they do, but they are typically looking at other loopholes, which is why we at Fireblocks take a very, very interesting approach. We have a multi-layered security approach to it. And it's actually very similar to a medieval castle approach. For people who are familiar with medieval castles, or if you are a Game of Thrones fan, you would always see a castle on top of the hill. The castle will be surrounded by a town. There would always be a drawbridge. Then there will be multiple walls. So the idea is that even if one of those layers gets breached, there are other layers to take care of that.
Yes.
And that's an approach that we have taken at Fireblocks, which makes us one of the most secure infrastructure providers. So it's not just MPC or multi-cloud. We actually, with MPC, we are able to derive key shares which sit across multiple jurisdictions, across multiple cloud providers. All those are then secured under hardware enclaves. Then we also have a transaction policy engine, because oftentimes people don't take care of the fact that sometimes the hack could happen internally. A rogue employee could just go and make some changes in the transaction approval policy and direct all the funds to his or her wallet. The last point is on the deposit spoofing, which is where the Fireblocks network comes in. And Fireblocks is one of the only players who actually guarantees securities of assets, not only when they are in custody, but also when they are in flight. So we are actually able to secure the deposit address as well. That prevents deposit address spoofing, man-in-the-middle attack, etc. So the point I'm trying to make here is that education awareness is also very critical, because you have to move beyond just securing private keys. It's a matter of other elements as well.
I'd like to understand the regulations side of this. Dr. Marwan, I have a question for you. So if a critic of crypto custody were to say to you, well, a cold wallet can be used for money laundering, it can be used for tax evasion, for obvious purposes or reasons, how would you respond? What is the regulator's attitude to adoption of self-custody solutions of crypto assets?
So I don't know if you've been to the Vara booth, but if you haven't, I advise you to go and visit them. They are actually creating a platform where anybody can plug in their tools, whether they are a KYC provider or a wallet, a self-custody or non-custodial wallet, or any central, decentralized, whatever kind of project you have. If you are willing to work with the regulator is actually will provide you the technical tools to connect to them and provide clarity of what you're doing, your customer, KYC on a transaction-based or on a long-term based, customer identification, know your transactions and everything. So they're going above and beyond a regular, regulator into actually implementing technical controls as a regulator and have clarity over the regulation and the technical implementation that they're using. So it's extremely forward-looking, whether it is for custody or insurance purposes or any other purposes. Having a technical control has a huge value, and it's a leapfrogging a lot of the other regulators, where they are still working with papers. They are still doing audits, on an annual or semi-annual basis. This is a live audit with live portal for law enforcement to come in and check transactions. It's a clarity as well as peace of mind as well for the consumer.
What is the fine line, final question for you, Dr. Marwan, what is the fine line between regulation and too much oversight? For on one hand, the crypto purists would say the whole reason the crypto industry exists is decentralization away from the governments. But on the other hand,
slider, right?
Yes, yeah. What's the middle ground here where you have proper regulation but not too much oversight?
I think there is no middle ground. I think it's a completely shifting kind of space, and it's up to the regulator to be able to listen to the community, listen to the exchanges, whether they are central or decentralized, listen to custody solutions, listen to insurance providers, be able to listen and adopt and be able to move that slider wherever it needs to be to the comfort level of most people. You cannot please everybody. Of course, you're going to have people who want complete privacy, and you want to have people who have complete transparency. You have to literally play with the slider on an ongoing basis to provide clarity, at the same time provide insurance and assurance for the customer that this is the safe environment to operate in.
I understand. I think we're almost out of time. Do we have any questions from the audience? There's one question? Okay. Let me, is there a microphone for the audience member? I'll give you mine.
This one. Thanks for the very interesting panel, guys. Question for anybody or everybody. Account abstraction. Is this some sort of solution for enhancing your business or just like individual retail business? Account abstraction.
I'll take it. I'll take that.
Okay.
And then maybe you can add on it. So it is one step in the right direction when it comes to the ease of use, especially for decentralized exchanges. It is not a silver bullet, but it is a tool, and it's a way to make life easier.
All I will say is, so we have a very big R&D team. We have about 60 to 70 crypto scientists and cybersecurity experts who do research and development on a lot of topics. This is one area of interest. We are doing a lot of research around this topic. Still early days. But I hope this will lead to something. So watch this space for more. Hopefully, we'll make some announcements in the near future.
Okay, I think that's good. Thank you very much for our panelists. Thank you to Dr. Marwan and Alvin and Sagar. I appreciate your time. I appreciate you sitting here and watching us. Thank you very much. Have a good day.
And thank you, Dave. We're big fans of yours, of course.
Oh, is that true? Okay, well, thank you very much. All right. Thank you. Thank you, Sagar. Thank you.
Now, normally before you leave the stage, that man runs out with his camera. I don't know where he's gone. Has he gone for a coffee or something?